Hi everyone and welcome to the Urban Investor, where I track my single income family of four's journey to FIRE, financial independence, retire early. In this video, I will review my 2020 year-end portfolio, net worth, breaking down all my assets and liabilities, as well as how I managed to grow my net worth over 100% in the last 12 months. Please do check out my last video where I detail my income, expenses and savings rate for the month of November. So who is the Urban Investor? I am currently 32 years old, happily married with 2 young children, working for a global payments company based out of London. My full-time career has spanned over 10 years now, and I've worked for my current employers for about 7 of those years. I have effectively worked from the bottom of the food chain to being one of the senior heads in finance in the company today. This probably explains why I'm good with my numbers and a real finance geek at heart. I am the sole owner of my household, as my wife is a stay-at-home mum, sacrificing her career for our children. So 2020 was a major turning point in my finances, as you will see shortly. I began the year with assets of £474,000, which was made up of largely my home, which I purchased in October 2018. I had a pension fund valued at £23,000, which I accumulated over 6 years, and at the time only contributed a mere 6% of my income. I also had very little cash in the bank or emergency funds. Now my property makes up the bulk of my portfolio, and earning income from my home isn't really high on the priority list, but this is something no doubt I will consider with age, particularly as I might look to downsize as the kids grow up. My liability and debt were almost as high as my assets and totaled almost £400,000 in January. This was made up of a pretty hefty mortgage of £358,000 and a ton of short-term debt, £38,000 worth actually. This included a personal loan of £21,500 and credit card debt of over £10,000, both of which were taken to fund renovations to the home that I purchased in 2018. Add to that over £5,000 for car leases for 2 brand spanking new cars, because hey, why have one new car, right? Finally, I have £700 for a new sofa, because why not, it's interest free. The only saving grace was, with the exception of my mortgage, all but one of my short-term debts were all interest free. This meant my net worth was £77,711 in January. The next few months ticked along, but you could already see a few alarm bells ringing. This much debt on a single income household was not wise, particularly with no emergency funds or liquid assets. And then, as we know, we had the coronavirus pandemic kick off around March. This meant for the first time since I started full-time employment, so spanning over 10 years, that I had no pay increase. In fact, I had to take a pay cut. To avoid large-scale redundancies, my employers enforced a 10% pay cut for 3 months, and also signalled that bonuses would be significantly reduced. This all happened around May time, and I've brought back up my debts at January, particularly focusing on my short-term debts so that you can really see how much of a sticky situation I was in. This was a real pivotal point, as I knew I had to take back control of my finances before something gives. My family and I ending up homeless or on the street. Therefore, here you can see the effect of the next 6 months from the decisions I took. And you can really see that blue line, which is my net worth, start to pick up. In fact, in the second half of the year, my net worth grew £72,000, almost doubling my net worth in 6 months. So what did I do to grow my net worth and portfolio so aggressively? You can see my assets grew £58,600, mainly driven by my property, which amounted to about £35,000 of the increase. Now you might argue that I didn't really do anything to drive this, and you probably have a point. However, what I would say is seeing a return of 10% in 2 years is not normal in the housing market. I waited 3 to 4 months before I saw the right property, and it wasn't until my 4th offer that the vendor accepted. In a market with Brexit uncertainty, there was no way I was going to overpay, and therefore I remained patient and waited for a bargain. Fortunately for me, I bought my home for £35,000 below the list price, and meant I was in a good position. As you saw from my short-term debts, I ploughed a significant amount to renovate and modernise my property. Despite this, I've only taken the midpoint of the Zoopla valuation just to be fair and not skew the numbers to my favour. Also, it's good to know that the rental value of my property is over £2,000, meaning I stand to make £700 income after taking into account my existing £1,300 repayment mortgage. Next up, you can see my pension fund has literally doubled. There's two factors to this. When the pandemic hit, my fund tanked, as you can see from the graph. This triggered me to look into my fund, and as I researched, I found that my fund was a passive low risk rated fund, meaning low risk, low return investments such as bonds and gilts. I wasn't really happy with the fund as it wouldn't be more than 2 decades before I planned to draw down, so I immediately switched this to a high risk reward S&P 500 weighted equity fund, and you can see the results from the graph. The gap between the purple line and the contributions in green are far greater to the right versus the left when my investment was in a low risk fund. So on top of switching my fund, I also increased my contributions from 6% at the start of the year to 22% by the end of the year. And again, this is shown by the curving up of the green area, which show my contributions. By switching the fund and increasing my contributions, I managed to maximize returns and start to take advantage of the power of compounding and tax relief on pensions. Cash saw minimum change as I began to focus on clearing my debts, particularly my short-term ones. You can see my liabilities fell by almost 32,000. 10,500 were from my mortgage payments, which despite my pay cut, I continued to overpay by £300 a month. Next, you can see I significantly reduced both my personal loans and credit card debt. This will continue to be a focus in 2021, and I set up direct debits to pay a chunky fixed amount each month rather than just the minimum payments. This way the money is gone before I get ideas of spending it elsewhere. Next, I have my car leases and sofa payments, and here I just pay the agreed amount each month. Once these contracts are finished next year, I have no intention of renewing. All of this meant my net worth increased by £90,000 and over 100% in 12 months. So looking back on my situation, it was clearly unwise to have such debt leverage on a single income household. When the coronavirus was happening, it was probably one of the worst things that's happened in my lifetime. But for my finances, it was possibly one of the best things that have ever happened. It forced me to wake up from my debt sleepwalk, and I am motivated more than ever to continue to build wealth, stay away from debt, even if it's the tempting interest-free kind, and finally make videos to hopefully inspire others to break the debt shackles and take back control. So what do you guys think? Are you targeting to be debt-free in 2021? Let me know in the comments below. If you've liked this video, please give it a thumbs up and subscribe to the channel to follow my f.i.r.e journey here on YouTube. I've also set up an Instagram page where I'll be sharing more regular updates, so please check me out there as well. Hopefully I'll see you in the next video.